Rolling. So good morning, everyone, to Market Insights. This is our first Market Insights of 2021. Yay! Which means we all survived 2020. I am joined today with Scott Kiburz, who is the Vice ARMLS Chair. And we were talking yesterday, and we used the word crazy. And I told him that I cannot have a conversation about our real estate market right now without the word crazy coming up. So Scott, give us all the craze.
Well, let's put an exclamation point on that within the first 10 slides. But you'll kick us off, Sarah, and welcome everybody. If you have a question or anything, please jump in the chat box with that, and Sarah and I will work hard to get through that. But ladies and gentlemen, just fast facts that we like to present. So if you know nothing else, you're here for only a minute and a half. Please know that as of 2 days ago, we had 4,652 active listings in Maricopa County. That's active only, and that includes the SF is single family at 3195, TH townhomes 423, condos 586, and modular homes down to just 3. So 4,652 homes for a population metro around 5 million. Sold, we did 8485. Here is an exclamation point of crazy. Our absorption rate, 168+%. That means if we had 5,000 homes available and we didn't add another home in the next 30 days, we would sell out in a little over 2 weeks, and that we are actually pulling forward from the next month to get over 100% sold in a month's time. So 168% is our absorption rate. I don't know how long we can sustain that, not much longer. Coming soon, 476. That was introduced in February a year ago. That peaked at about 777. Please know at 476 homes coming soon, do the math, we only have 4,652 actives. 10% of our market is coming soon. Ladies and gentlemen, if you're a buyer's agent or working on buyers, or even what's getting ready to list and sell and something you're helping your client with, pay attention to coming soon. It's its own status, and it's 10% of our market, and that's good to know. Interest rates still between 2.5 and 3. Our average sale price surged 432, 617 in Maricopa County. Sarah, take it away. Next slide. Let's go.
All right, Scott. I've got some stats from the article.
Okay, so ladies and gentlemen, I just found this yesterday. Thanks, Justin. This is from Realtor.com. This was posted January 4th. And what happened is this. They did a prediction of the top 10 post-pandemic markets. And lo and behold, ladies and gentlemen, Phoenix Metro, Phoenix Mesa Scottsdale, was ranked number 6 out of 10 in the nation. And what I like about this is they're looking at sales growth and sales price, 2 different things. And for a combined growth of 18.4, they're calculating for our marketplace, 18%. Ladies and gentlemen, if you take the Case-Shiller report back 180 years, adjust for inflation, the increase is 2%. Ladies and gentlemen, at 18%, we are set for another banner year. It's not going to slow down. It's going to be crazy. Sarah, thank you for including that too, by the way. I've referenced in this monthly event a couple times the Greater Phoenix Economic Council, and I just wanted to give them some street cred because in October of last year, they were ranked number 1 as the top economic development organization in the U.S. and that's for cities over 500,000. And so I just want everybody to know that they do a good job and they're valid, and they were ranked number 1 at what they do back in October. Sarah? Something new is coming in the Phoenix Business Journal. This came out just a couple weeks ago. Lennar Homes is going to break ground on a subdivision out in Surprise and Buckeye, where they're going to have the super garage option. And this is part of a next-gen home. So this particular home that they're illustrating here in the diagram is technically a 2,700 square foot home, 3-car garage with a super garage, because RVs and toys are a thing that people like. HOAs don't want them parked in your driveway. So a super garage is a thing. And they're going to break ground in March of next year out on the west side with some of these models. and they're going to be watching nationally. Is this something we need to build in the future? Sarah?
That sounds super, Scott.
Isn't that fun? Ladies and gentlemen, I always like to just track what the trend is with showings. This is from showing time. And I put a green arrow in the top 1/3 that this is the last number that they put out on December 29th. That graph in yellow represents the current year, or this current past year, 2020. The black line was 2019. And they're going to readjust and recalculate out starting in January 18th of 2021. And they'll reset this graph. But after the pandemic in March, April, we came back to a pretty standardized market for the balance of the year. I just wanted to illustrate that. That is showing some showing times. Here is December Cromford report. Perfect timing, Sarah. I like this report from Cromford. It's like a hockey stick of how many days of or weeks of market do we have by price point. And this is throughout the metro. And normally this time of year, homes 2 to 3 million, 3 million and above. At a minimum, we've been running 14 to 29 months. When we load luxury in October, early November, I've seen that top bar at 3 million reach all the way over to 60 plus months. December 1st of last year, we had a standard inventory of 6.1 months at 3 million and above. And on a side note, one of our agents in our office listed a home. She thought originally when she was considering listing it in August, it would list it between 1.9 and 2.1. She listed it 3 weeks ago at 2.5, had 5 offers, 3 with escalation clauses. The house went for $150,000 more than its list price at $2.5 million. It is crazy out there. Next slide. Ladies and gentlemen, I like this graph. This is the extreme graph from Cromford. And I put all these green arrows in here because there's some extremism happening. But the first one I wanted to point out is that the top active listings, the highest number we ever had of active listings was 58,000 in 10 of 07. And according to this graph, the low we've ever had was 4/1 of 05 at 8342. Now, you got to know that this report looks at homes that are in our MLS, Arizona Regional MLS, but the home could be listed in Show Low or Flag or Prescott or Mexico, or wherever. As long as it's going through our MLS, it counts in this report. If we just looked at Maricopa County, I got to believe we're at an all-time low. We know Maricopa County's around 4,300. But the satire that I wanted to point out for your people watching today is that very top line where it says typical, we typically have 28,000 active listings. That's our typical number. We're running at under 4,900 right now, active listings. We had some extremism, so the rest of the green arrows point out average sale price pending monthly is an all-time high. Listing success rate, 91.4, all-time high, hit at the end of December. If you had a listing, it's almost 92% chance it's going to go and sell. And average sale price, according to this, surged to 394. But we know in Maricopa County it's at 423. Next slide, Sarah. I wanted to illustrate this report. This hasn't been updated by Cromford yet, but this is the annual report, and we're going to include this next month. It just hasn't come out yet, so stay tuned for that. Sarah? This is a summary graph from Cromford, just showing that our annual appreciation for the month is up 17%, and our change annually appreciation is 12.5. So over the month, we're up 17% from this time a year ago, and for the year, we're up 12.5. Sarah? This is active solds and under contract from ARMLS, 4,864, and that is 2 days ago. Next, please. What I wanted to illustrate here, early January. So just note the trend from January of 19 to January of 2021. The trend has been essentially up and rising, median and average. But note here that the average surged in January of 2021. I mean, the gap between the blue and the red line for January is already taken off. And we're seeing that in pricing, etc. Sarah? One of our newer agents said, remind me, Scott, of what an absorption rate is. So I went into several different companies to get their definition. And I pulled this one out and I blew up the bottom paragraph and put it to the right on the slide. So the example is here. If we have 6 homes in June between 3 and 500, 30 are still available at the end of the month. We sell 6, our absorption rate is 20%. And it goes on to say that generally a 20% absorption rate favors the seller and a 15% or less absorption rate favors the buyer. Sarah, the next slide. We're at 168% absorption rate. Not 20, 168%. Our market's on fire, ladies and gentlemen. We all know that. Next slide, please. This is an overview of Maricopa County. So the next 3 slides are really gonna key on Maricopa County as a whole. So this is just showing our active listings at 4812, under contract 7981, and sold at 8120 and some change. Here's what I want you to see, ladies and gentlemen, in this audit today, is that we sold 8,100, and it's behind the screen. Sarah, what's the last number? 8128, right? That was our solds. If you go down to line 2 and see new listings, 5,849, we're burning about 2,300 more homes than we're listing. That is crazy. Our market is going to shift here, or do something more drastic. But that's the key takeaway from this graph today, ladies and gentlemen. Is sold 8128, new listings only 5849. Wow, we got some work going on out there. Next slide. What I wanted to illustrate here, ladies and gentlemen, if you take the line of December 2020 and you're looking at home prices. So MOS stands for month of supply, STL stands for sales to list price, and then MOS month of supply again. So it's doing this by 1 to 2, 2 to 3, 3 to 5, 500, 700, 700 to 1 million. I wanted to point out our key market combined is 200 to 500,000. And right now we're at 100 or just over 100% of sell to list price. Escalation clauses, paying over asking is more common than it is anything. Had another agent in the last 2 weeks say, hey, I'm offer number 34. There's 4 cash offers. How do I compete? That was the market of the moment. Next slide. Pay attention to the next 2 slides, ladies and gentlemen. More than anything else, follow the green volume levels. So in the months of September, October, November, December of 2020, far right side, we're peaking compared to the previous year and the previous year at those same times 2 years ago, the last quarter of the year. And if we go to the next slide, I try to give an illustration here. One more, try one more. Sorry, I took it out. Back up 2, my apology. One more. What I wanted to point out here is, ladies and gentlemen, if you looked at our listing volume, they're just little nubs of November and December. The amount of homes available versus the number sold is the illustration of the discrepancy of 168% absorption rate. Next slide, please. Here we're just illustrating down the current in the gray at the top, the current number of inventory. The 4864, what this column is doing is by price, it's telling you how many units are available in Maricopa County at those price points. And so if we look at even the $3 million price point, 247, and that's really only a 6% inventory. 6-month inventory that we're selling 500 homes a year right now at over $3 million a piece is really what it's saying. Next slide. Ladies and gentlemen, here in this graph, we're on the far left circle pie is current active listings versus a year ago active listings. And what we want to compare in the orange, on the pie graph on the right, we had 21% of our active listings were between $200,000 and $300,000 a year ago. And in yellow, a year ago, 32% of our homes were 300 to 500. If you go to the left pie graph, you see that in 2020, We've gone from 21 down to 15% of our listings. We lost 5% of our market total went away from $200,000 to $300,000. And it didn't arrive in the 300 to 500. It pushed not even to the next graph, which is in black, 500 to 700. It started not even in the next graph, which is 700 to a million. It surged all the way up into 1 million and 3 million. Those number of homes had the biggest price point growth of availability. And we went down in the units between 2 and 500,000. Our market is definitely shifting upward in terms of price. Next slide. So same type of concept, only these are the ones that are under contract. And you would expect this to be very similar to what we just looked at. So on the right-hand pie graph in black, 35.72% is the number of homes a year ago that were between 2 and 300,000. And the next biggest piece, 34% were between 3 and 500,000. Those two pieces of business a year ago represented 70% of our sales. 70% of our sales were between 2 and 500,000. What's happened in the pie graph on the left, 25% between 2 and 3, 41, it surged there, 41.99. That works out to 66, down about 4%. And the rest of that is surged up to the higher price points. This graph, yet one more year from now, will really tell a story about how our market has grown in terms of home value price. Please, Sarah. This is a new graph from ARMLS, from the Rapid Stats tool. I started out with something really quickly. This is the number of new listings on an annual basis. And I love the simplicity of this. So I am a buyer's agent. I'm building a team. I'm a broker. In 2015, there were 104,209 new listings the whole year that went into ARMLS. And it reduced to 101 in 2016, 100,000 in 17, 99,000 in 18. And in the year 2020, December 31st, we had 96,121 new listings inserted into our MLS for the year. Well, that's down, what is that? About 8,000 fewer than we did in 2015. So just, ladies and gentlemen, know the trend line is we're actually putting less homes in the MLS. Doesn't mean we're selling less, but we could be doing more for sale by owner. We could do some more non-MLS, etc. Look for that to have an uptick. But as a general knowledge base for everybody on the link today, we listed 96,121 homes in 2020. Next slide, please. New graph again. These are the number of canceled listings in ARMLS for the last, well, since the quarter 2017. And what I wanted to point out is Q2 of 2020, we had 3141 cancellations, and that's our spike of COVID. But since COVID came and went, we're at an all-time low of canceled listings at 2281. If you're listing, we've got a 91% success rate of something getting sold. Thanks, Sarah. Go ahead. Just a reminder from our little quiz questions last month, the biggest single search day annually is still Christmas Day, when people get their new phone, their new computers, new iPads. And the single biggest day of cancellation is whether I take a 6-month, 5-month, more people have a cancel listing happen on December 31st. And so if you look at the 3 pinpoints from December of 18, 19, and now 20, you see the graph, the spike, that is a cancellation day. So if there's one day a year that you want to call expires and canceled, make it New Year's Day. That's when you're going to see the most. Next. Okay, quick summary on these slides. We're going to do Maricopa County, then we're going to do Phoenix, and then, ladies and gentlemen, for the balance of the time, and I know we're running up against time, this goes so fast, we still, once again, have 18 cities that have the same type of data on the infographic from ARMLS. So in blue, active listings. Our active listings for all Maricopa County this month, starting January 1 compared to a year ago, we're down 49%. Sold listings are up 23, and Maricopa County as a whole is up 17.4% for the year. all things averaged together. Month supply is down 59% to just 0.59 of 1 month. Days on market, 15.82. So if you'll allow me, ladies and gentlemen, to do blue, green, yellow, whatever I want you to focus on. This is all of Maricopa County. Sarah, next slide. Okay, this is the graph I was wanting to show earlier. I apologize. I put these two together so you could see actives and under contract. So on the top graph, green is listing count volume. And just look how low our inventory was the last 4 months of 2020. But by contract, under contract, by contrast, under contract, the last 4 months of 2020, you see that our volume was very high in comparison. And then again, our average sale price, median sale price is up. Next slide. Okay, so this is Maricopa County rentals. Same type of thing. You know, only about 14% of the MLSs insert rentals. We're one of them. There's many other places to go get a rental search, but they're in there, and you're watching the trends here. So the trend in Maricopa County is that the price per square foot went up 12%. And is averaging, if you have a 1,000 square foot rental, it's going to rent for a little over $1,160 a month. That's the average, but it's up 12% from where it was this time a year ago. The next couple slides, Sarah, are Phoenix, the same thing. It's a repeat. So our active listings are down 45% in Phoenix versus 49. Phoenix is up 16.3 versus 17 and some change. And our median days on market is way down to just 31 days in all Metro Phoenix. That's a pretty good return, and the market is tight, of course. Next slide. Same type of thing. I wanted to illustrate the actives and the under contract. So you can just see the low volume in the green bars on the top and the high volume of sales for the last 4 months of the year. I heard many people say I had a record December versus some people take their foot off the gas and pause. Next slide, please. This is Phoenix rentals. They're up 11%, and they're at $121 a square foot. And their active listings are only down by 2.6. Sarah, if you allow me to go to the next slide, we got a break. And now we are running through these.
Yeah. And we will have all of these city slides and the entire presentation, the recording, and all of the slides available this afternoon after class. So if you would like a copy of these, please reach out to the business development manager that invited you today, or you can shoot me an email and I will get them to you. I'll put my email in the chat.
I have a couple bonus slides in here looking at Phoenix. This is from GPAC as well, looking at housing stock. Next slide. Is there one more? This I just thought was trivial. My mom and dad bought their house in 1964. It was built in 59. In the 1950s, the average house was 1,303 square footage. Today, we've only gone up to 2,493. And post-COVID, if we look at this 10 years post-COVID, I wonder if our square foot of our houses or living space average surges to include home office and home learning for children.
Oh, most definitely.
That's our insight for the month, and I am grateful for you to allow us to do this. We always appreciate everything that Landmark does for our office and other people out there, and happy to share this knowledge with your people online today.
Oh, we are thrilled to have you come share this with us, Scott. Well, I'm relieved to hear that our market is doing well and that the projections are continued to be good for us here.
Absolutely. Looking really good. That's all I have for today, everybody. Making it.
If we have a few minutes left, if anybody does have any questions, please feel free. Oh, okay. We do have a question, Scott.
Please.
How accurate are canceled but sold privately a month or shortly later?
So two different things. So we can only track the canceled, and then it would be hard for the informatic system inside of ARMLS to say that would show up as a non-MLS sale. I think I understand the question, but two different sources to get that answer. Non-MLS is definitely on the rise of the market of the moment. If you know somebody who's going to sell, that is the sweetest spot to be right now. Is I have a friend, they're getting ready to list their house in 3 months. and I can have 8 sidebar conversations with people, and I'm going to know people that want to buy that house before it goes to market.
Excellent. All right, Scott, I don't think we have any other questions coming in, but if you do have any questions for Scott, just shoot them over to your business development manager or myself, and we will be happy to get them answered for you. Once again, this is Marketing Matters, Market Insights. We do this every month on the first Thursday of the month. So please join us next month. Once again, thank you, Scott. These are always just fantastic and insightful, just like our title says. And thank you. And thank you to all of our business development management team, Beth, Becky, Melinda, Mary, Zach, Patty, and Michael. You guys do a great job of getting everybody here every month and helping them to market their business. So if you do need some outside the box marketing help with your real estate business in the new year, it's the new year, so it's back to the grindstone, right? Please reach out to our business development management team. We continue to grow. We're all across the valley now, even out in Goodyear and Arrowhead. And, those are the areas you were saying, Buckeye, Surprise, that's where those new builds are going in. So those areas are growing, and Landmark Title is here to serve you. So thank you to Landmark Title for giving us the ability to get on every month and share all of these stats with you. There is a Landmark Title office everywhere in the Valley to help serve your not only marketing, but title and escrow needs. So thank you, Scott. We'll see you again next month.
Thank you. Happy New Year, everybody.
Happy New Year.